right. Um, just a second. Okay. Just want to post this link on the group. All right, it's the 10th of October 2024, and we've got about 25 minutes to NY Open. So we're going to get straight to analysis here and see if you have any trading opportunities for the day. Okay, just before I do so, let me just post this link on the group. Just 1 second. All right, just close this. Just 1 second. Okay, I think all is good. Yeah. All right. Just a second. Okay. Right. This is the daily time frame. This is gold on the daily time frame. Okay, so before we proceed further, let's just look at news today. We've got CPI today. So in terms of volume, it's a pretty big day for the week. We've got CPI today, and then we've got PPI tomorrow, right? So both these days should have significant volume. So today CPI is in almost about 50 minutes, 55 minutes from now. So we have plenty of time. I'm not going to be taking any trades for the next 50 minutes, 55 minutes at least. We're going to just look at the chart, draw our zones, look at our levels, and see what opportunities we might have for the day. Um, Gold is very bearish at the moment. We've closed below 2632 the previous day and the day before that. Okay, that's weekly support 2632, and price is very likely heading to 2600, and then maybe even lower to 2586, right, or possibly even lower than that. Now that is about the next weekly support is about 250 pips away. That's very possible today. That's very possible. Even lower is possible. Okay, on CPI, you can expect a 300 or a 400 plus, a plus 400 pip move, or a plus 300 pip move, or even a plus 500 or 600 pip move today. Right? That's all possible. So let's just be conservative and expect a 250, 300 pip move today. Either going up or going down, because we don't know what the price is going to move up or we're going to move down, right? All we can do is look at the chart uh, on uh, on a certain time frame, on probably the H4 time frame, and look for a high liquidity zone that we can trade from. So I really don't care too much about the weekly or daily time frames when it comes to session trading, because I'm trading the first 2 to 3 hours of the New York Open. Okay, I'm trading the first 2 to 3 hours of the New York Open, so it really doesn't matter what the weekly or daily bias is. To me, makes no sense. I'm not interested in that at all. I'm just going to be looking for H4 high liquidity zones to trade from. Okay, so let's get to our trading chart. Before we mark out the chart, like I do every day, I just want to spend a few minutes, a couple of minutes, on what happened yesterday, right, with the trade that we did take. So price did come to to where my order was, and it kind of triggered my. I think I took a pending order, market order there. If you watch the last 30 minutes or 40 minutes of yesterday's session, you'd be able to see that we drew the zone, we drew a light red box inside this dark red area. Price did come exactly to the pip there, and it dropped about 140 pips. Okay, that's what happened. Then price pulled back. The H4 candle closed below this support here, right? So if you look on the H4, it did close below, this candle did close below the support, but the next 15-minute candle, or the next 30-minute candle, um, 30-minute candle close back inside, right? So I said if it closed back above this support, then price is going to very likely head up, and that's exactly what it did. It went back about a 55 pips, and then it touched that level of the fib 2617.71, and dropped again, right? So that is why these fib levels, if you draw them correctly on the correct candle, they work perfectly. Look at that. That was just a tap, a 2 pip tap into that fib level, because once it breaks this 2613 and closes below that, then it can always pull back for liquidity to this area, or even up here. But very unlikely it comes back here. It generally pulls back to this area, to this fib level right here, to the start of the fib level. Okay, that's the start of the fib level right there, and then it pushed down. If you want to see how this fib is, this is not your default fib settings. If you want to see how this fib is drawn, please watch yesterday's stream. It's very clear. I've shown this many times in my previous streams. You can go back and watch it on that. Right, sorry. Okay, so then price pushed down, and then we've come back there right now, and we are kind of pushing down again from that area. Okay, so let's clean up the chart. Start with a fresh, clean chart. Let's get rid of all of that. Okay. Let's get rid of this. Okay. Yeah. So price just, I'm going to keep these zones above here. price is very unlikely going to come all the way up there. This price is going to probably not going to make a 700 pip move right up there, but I'm going to leave them as it is, and I'm going to extend these to the right. If you want to see how they were drawn several days. I mean, this was drawn maybe at the beginning of the week, and these were drawn a couple of weeks ago. You can go back, watch the streams of these dates. If you look at this is the 4-hour time frame. Go back and look at these candles, and you can find the date. I think this was drawn around the 26th of around the 26th, 27th of September. You can go see the streams there, and you'll see how these are drawn. It really doesn't matter, because the way I'm going to draw zones now is the way I drew these ones. Okay, so if you do pay attention to the way I'm going to draw zones now, then you'll understand that's exactly the way these were drawn as well. Okay, right. So price hasn't come here to this demand level right here. Okay, so I'm going to leave that just to save time. I'm going to leave that zone the way it is. That zone is what is left of a H4 demand zone. So there was a rally and a base and a rally here, right? There was H4 demand here. Price has come deep into it. So that's all that's left of that zone. Price hasn't broken it yet. That is why I have it right there. The next zone below that is this zone here. There's a rally, 2 base-in candles, and a rally. I explained all of this yesterday, right? Rally, base, and a rally, okay? And the zone below that is this zone. There is a H4 demand zone here, because there is a drop and a rally. So if it looks like demand, then there is demand there, but there is no base-in candle here. So to find the base-in candle, you'll have to go down to the H1 time frame. So we did that yesterday, and we have a drop and a base and a rally, okay, on the H1 time frame. Yeah, okay, so those are the zones that we have, and this is current price. Price is about 400. I'm going to draw another one further down here, because it's CPI. Okay, so before we do that, let's go towards current price and look for, so start with supply zones. Okay, so we have a, okay, right, let's get rid of all of that. Okay, so now that's what we have right now. Okay, that's a clean area. That's what we have. So this is supply. There's a rally, there's a 3 base-in candles, and a drop. Okay, so that's the rally. These are the 3 base-in candles, and then the drop. I hope that's clear. Okay, and the reason these are base-in candles is these candles have more wick, more combined wick than body. Okay, that's why they're base-in candles. So that's a rally and a base and a drop. I'm going to clean that up later. Then in terms of demand, we have okay, so I've got a drop here, 3 base-in candles, and a rally, push up, okay, on the H4. Drop, base, rally, or leg in, base, leg out. Okay, all right. Now price has come. There was a zone here, and price did come and tap it. On the H1 there was a zone. Yeah, there was a zone there, right? Price did come and tap it. So this was the zone that we drew yesterday. That's what we had yesterday. A drop, single base-in candle, and a rally. Price came deep into it. That's all that's left of that zone, right? It's just a sliver, just about 4 pip. But I'm going to keep it there because price hasn't broken through it yet. Okay. If price broke through it, then I wouldn't have that bit there. But there is a little bit of the demand left. I'm going to keep it. Obviously, I'm not going to be looking to take a trade there, but I don't want to ignore it, because there is demand there. That was the demand. Let me do that again. That was a drop. There was a single basin candle and then the rally up. So the zone started from here to here. That was a 84, 83 pip zone. Price came yesterday deep into it and pushed up from it. So that's all that is left of that demand zone, H4 demand zone. Okay, I hope that's clear. Right. Okay. Here, further up here, we've got a drop. 1, 2, 3, 4, 5, 6 basin candles and a drop. Okay, a drop, base drop. So let's just extend these now to the right. Today is the 10th. Okay. Now, if you are here for the first time and if you are wondering what HLZ is, I will explain that. I'm going to just move these to the right for now, but I will explain them. And if you are wondering what's the difference between the light red box and the dark red one, again, I will explain all of that. Just bear with me. If you have been watching the streams and you are a regular and you are here now, then obviously you know exactly what they are and the reason for them being where they are. Yes, and that's very far from current price, 600, about 700 pips away. Unlikely price will get there, but you never know. It's CPI today, okay? So let's put these digits down. This high is 2431, yeah, and the close is 810. 2431, 810. Okay, close 810. Yeah. And here it's the open 967, 75, 975. The low is 521. Okay. This low is 481, 521, 81, 501. Okay. And then that's fine. Okay. Just extend these to the right as well. Get rid of that. Okay. Right. Now, I'm going to come further down from here. Just going to put a mark there. And below that to the left, I'm going to draw another one demand zone because it's CPI. And this is 433 pips. Price can come lower. Okay. It's very possible. So that's all of that is a base. Starting from here all the way up to here. That's a huge base. So all of that That entire thing there. All of that's a base. Price broke it, came back down, and then pushed up. So just look at the H1 time frame to see what that looks like. Going to have to include that candle, not just there, right? We're going to have to include this candle because that's a drop. Let's just take a better look at that candle. It's 42, 34, 34 and 3. Yeah, so I'm going to draw it from that on point onwards. So the open 756, 686, 756, 6. Okay. And so that is 650 pips away. I think that should be good on the daily. Yeah, I'm covered until then. Yeah, I think that should be good for today. Yeah, the only reason I drew zones 600 pips away is because it's CPI. If it wasn't for CPI, I don't bother drawing zones beyond 200, 200 and about, beyond 200 pips or 250 pips, right? From current price. Generally 200 pips is good enough, okay? If it's a regular trading day, but because it's CPI today, it's very possible to have a 400 pip move or a 500 pip move in a single direction before price decides to pull back or reverse. That's possible. That's happened before, and it can happen, right? So, okay, so those are the zones that we've got. Those are the zones that I have for, yeah. Okay, now it's got about 5 minutes to NY open, but we've got about 35 minutes to news. So we're going to just continue with what we were doing, with what I was doing. All right. Now the next step is, now since I've drawn my zones, right, which are H4 supply demand zones. Now the next step is to identify high liquidity zones. As I say in these streams, as I say every day in these streams, this is the purpose, right? How to draw supply demand zones correctly, right? Ideally now I do it on the H4 time frame because I'm a session trader. Then how to identify high liquidity zones to trade from, okay? Because those are the zones that I'm going to be looking for trades. I'm going to wait for price to come to me from these zones. You can call them an area of interest or a high liquidity zone, whatever you want to label it, right? That's fine. Okay, but that's the area that I'm going to be waiting for a trade. And then thirdly, it's going to be how to draw support resistance levels in between these supply demand zones. Okay, that's the 3-step process that I follow every day. Right, so identify high liquidity. Now all you have to do to identify high liquidity zone is you have to check if this zone has taken out an opposing zone. So now it's not visible here on the H4 because there's a clean wick there. So I'm going to go down onto the H1. Okay, and so that zone took out this demand here, right? There was demand right here. That zone took out. There's also demand here. This was a drop. There was a basin candle and a rally. This low was taken out right here by this push down, this wick. This wick right here took out this low, right? And there was demand here. There's a drop, a base, and a rally, and that was taken out by this move down. So that is a high liquidity zone. So I'm going to bring this label here, high liquidity. Now, what it means is that if price gets here, I'm going to be looking to take a possible trade. That's what this means. When I identify a high liquidity zone, I wait for price to get to those areas to look for a possible trade. Okay. Now we've got demand here. Here, let me just. Okay. Got demand here. Has this taken out an opposing supply zone? Again, there's a wick there, so it's not visible. So let's look on the H1. Okay. So there is, yes. So that's a drop, and that's base in candles. 1, 2, 3, 4, 5, 6, 7, 8 base in candles, and a push up. This move up did take out this high, right? It did take out this high. Okay, because there is a rally and a drop. So on the 30-minute time frame, so there is H1 supply there, but on 30-minute time frame, you will see a base there like that. That's the base, right? So that was a rally and a base and a drop. So that zone would have been from there to there. It's a 53, 52 pip zone. So that zone was taken out by this wick here, and this wick started here. This was the move up that took out this zone. Okay, I hope that's clear. So this becomes a high liquidity zone as well. So I'm going to move this label across here. Okay, right, let's get rid of that. Okay, clean everything. Now that's exactly the process that I followed here, is the process that I followed to in identifying if these were high liquidity zones or not, right? And they are. That's the reason the labels are there. Price has not come to them yet, so I'm going to leave them as they are, right? Until price comes to them, reacts at them, or breaks through them, I'm going to keep those zones. Okay. I generally start always with a clean chart, and I advise if you are a new trader, always start with a clean chart just to avoid confusion. But that takes longer for me on these live streams to start every day with a clean chart. So I leave zones that are very far from price that I've drawn, all zones that I've drawn, I leave them as it is. If price hasn't come to them, if price hasn't come to them yet, then I just leave those zones as they are, right? Just to save time. So here we have a high liquidity zone because if you watch yesterday's stream, I explained why this is a high liquidity zone. It took out supply onto the left, and this one too. Now the new zone that we drew here, we're going to check if that's a high liquidity zone or not. Again, let's look on the H4 first. So there's a move up here. So we have to see again. There's a big wick here, right? So we have to see if there was H1 supply there that was kind of taken out by this. There is a move up here. There is a big wick. There is supply there. But it's not really clear because the wick is too much. So we have to go down to the 30-minute. Okay. It's not visible on the 30 either, but there is supply there. And this move that started here went up there, pulled back, went up here, pulled back again, and this took out that high, right? But I am going to mark this as a high liquidity zone only because there is weekly support at 2558, right? So if you look at this chart, we've got yeah, that's 2558 right there. There is weekly support here. Okay, so I'm going to mark this as a high liquidity zone just because it's got weekly support. Okay, otherwise I wouldn't have, because this hasn't taken out anything, hasn't immediately taken out anything to the left. It eventually did. This move up that started here did take this out, but this is the zone that took that high out. This zone right here, not this and not this. Okay, this zone. So that's a high liquidity zone for sure. But because there is a weekly support level here, I will mark that as a high liquidity zone. Okay, right. H4 demand, that's the closest H4 supply, and that's the closest H4 demand. Okay, so now this is the New York Open candle, this is the 15-minute candle of the New York Open. Um, okay, now there are a few other things that I usually do, which is kind of understand what price has done so far, right? That's another thing that helps you, that will benefit you. If you do it, you don't need to do it, but if you do get into the practice of doing it every day, it will benefit you because you'll have a better understanding of what, if you have a better understanding of what price has done so far, then you might have a better understanding of price, of what price might do during the New York session or the New York Stock Exchange session. Okay, and that's what we're going to do right now. Let me just save this. Okay. Okay, so this is where, okay, that candle right there is where the market opened, right? This is where where the market opened, right here, this candle right here. Okay, just zoom in a bit. This candle right here, that's where the market opened. Then we made the Asian low. So just put a line there. That's the Asian low. Then price moved up, Asian high, Asian high. Yeah. Then it made the Asian high, which is there, right? That's the Asian high. Then came down, London high, London low. Okay. Then we made the London low right there. Then yeah, that's the London high. Okay, right. Now let me explain. So this is the market open. Price was in demand. So the Asian session is this was the market open, and price was deep inside demand, that demand zone that we had from there to there. Price is deep inside it. If you watch yesterday's stream, you'll see the demand levels and where price exactly came to. So Asian session has less volume. So it's very unlikely that it does happen, but it's unlikely for price to break a zone in the Asian session, especially if there is CPI later on in the day, right? So it's unlikely for price to break a zone. So what price did was, from that previously tested H4 demand, price pushed up, came back, retested the low, pushed further up, and created the Asian high. Came down, ranged a bit, tried to break the Asian high in the London session, and it couldn't. Retested that area, fell down, came down, created the London low, went back up for the second time. So this is the first time it came during the London session. That was the first trying to break this high. It couldn't. It dropped. It couldn't drop back to demand, right? Created the London low and pushed up, and the second time broke the Asian high, right? But it didn't close above. It ranged. It ranged all the way up to here, right? Right, kind of, yeah, all the way up to here, and that created the London high. Now, after we created London high, we've been ranging. We've been ranging, we're ranging, and then price closed above, touched H4 supply, right? Touched H4 supply, and closed back below the London high, right? Now, since it's closed back below the London high, it's very likely going to come and touch the London low, which is there, right? So price should come back down about 36 pips, 37 pips, and come back to the London low. That should be the next move, the anticipated next move, right? That we can anticipate because we've touched H4 supply. We've also closed back below the London high. We should come back and touch the London low. Okay, I'm going to leave these lines on the chart for a while for the next 30 minutes and then I'll delete them. Because I don't like having too many lines on the chart. Okay, so that's what we anticipate. Now we've got another 20 minutes or so to kill until CPI. Yeah. So we're going to take a look at this H4 area again, right? This is another thing that I do. Now the next thing, so I've drawn the H4 supply demand zones, identified high liquidity zones, which ones are high liquidity zones and which ones are not out of those zones. We've kind of understood what price has done so far and what it could possibly do next. Now the next thing is, if price is to come here and reverse at this, or since it already has come and if it's going to come down, where exactly did it come to? Or if it is going to come back for a retest again, where could it possibly come to? Where could the reversal be? Because if I'm a supply demand trader, I don't want to take a trade with a 62 pip zone like that, the stop loss above there, right? I want to be able to cut that down as much as I can so that I get a positive RR trade. That's the point of this, right? So that all this analysis leads to one of these two results. If it's a win, it's got to be a low risk, high reward, high probability trade. And if it's a loss, then I've got to lose less than my planned loss. All of these things on the left have to lead to one of these two scenarios. So here, what I'm looking for here is a liquidity candle, right? Now there is one on the H4, that's very big. Go down to the H1, that was the main drop. Go down to the M30, that was the candle, and that big drop there. Price did come into it. Go down to the M15. That was the candle yesterday that we traded. That was the candle from liquidity that we traded from, okay? And now, this zone has this candle right here. And this is a 50 pip candle. And price is reacting to it. Okay, so let me just mark this candle out. High 2072, close 574. 574. Okay, now go down to the M5. Price came to this candle here, came to the midpoint of this. This was yesterday's trade. Let's go down to the 1 minute and take a look at that. Yeah, so that candle right there, this candle, this candle right here, right? This low is 767, 767. Price tapped it here to come to the right. Price tapped it again, and we're falling. Yeah, we've fallen. We have this big candle here. So it's kind of unlikely price is going to come back up to this, right? Price has come into it, tapped it, it's come halfway into that candle, almost halfway into that candle. Gonna mark that anyway. Gonna mark that zone anyway. Close 1884. 1884. It's a 19 pip zone. And then further down here, so price came this way, tried to come back in, it couldn't, and it dropped close 1884. Let's just go to the left and see if we touched 1884. Yeah, we touched it perfectly to the pip, 1884. So that was the entry, 1884, 73 pip drop, right? Touched it to the pip. That was the area. Now, is price going to do that again? I don't think so. It's already come to that candle. Okay, let's open 1774. Let me just put one there as well. Now these are lower time frame demand supply zones within that liquidity candle, right? A liquidity grab, whatever you want to call it, a liquidity grab, liquidity candle from that high liquidity zone. We created a liquidity candle and we push down, right? And these are lower time frame, 1 minute, 5 minute, or 15-minute supply zones inside that. So this is on the 1 minute. I don't generally go to the 1 minute, but because there's a lot of noise here, I need to go to the 1 minute to look for supply, right? So that's the area price touched. It touched it perfectly. There is a drop, two basin candles and a drop. Price tried to come back. It failed. Uh, some traders refer to this as a FTR, or a failure to return. Price failed to return back into the zone, so it dropped. And when price came there, it touched that and dropped again, right? That's usually what happens. If it fails to return at one point on its way down or on its way up, then it'll come back and it'll touch, and there will be a reaction there. Okay, that's generally what happens. So 261884, 261774 is that one there. Now price is coming back up again. Now I want to take a look at, we got about 13 minutes, 12 minutes for the, yeah. I want to take a look at this, yeah, this 18, yeah. This move down says no top wick. Price is going to break this high. Yeah, this has no top wick. Says no top wick. Yeah, this candle has no top wick. Price is going to break this high. Price is going to break this high for sure. And then we're going to come into this candle right here. This is the candle high 735550. 7350. Hmm. All right, that's the 15-minute drop. That's a liquidity candle, right? It's a lot of liquidity. The 5-minute, it's that candle. That's about 18 pips. That's the candle. On the 1-minute, it's maybe this one right here. 78, close 77, close 77, 77. It's close 641. This low 550. Okay, right. So this is a liquidity candle, but I'm not too keen on taking a trade in here. I would like, if I'm to take a sell order, I would like price to try to come back up here to take a trade. But it already has, it touched 2618.84. So I don't know whether it's going to do that again. Highly unlikely. So if it doesn't, I might have to do with taking a trade somewhere here. 2616.41 or 2616.77, somewhere there, right? With a stop above this candle, which is about a 23, 24 pip zone, right? From here, it's about 22 pips, okay? That's the area I'm going to have to take a trade from. Anticipating a move back down once we break the uh, break and close below the London low, we're coming down to the Asian low, right? So that's about a 100 pip move, and then with CPI volume, anticipate price to come to 2,600, right? That's about a 170, 175 pip move. That's the idea. We got about 10 minutes to news. I also want to look further up here. Price does decide to. That candle right there, and that candle right there. So I'm going to mark that candle. Look at it on the 15-minute. Yeah, so that's the candle that I traded yesterday, and price did come into it. If you look at it on the 5-minute, it's that candle right there. And if you look at it on the 1-minute, it's this candle right here. Okay, this was yesterday's trading candle, 26 pip zone, and I took about 100 and I think it dropped about 140 pips, right? That was the trading candle. Now price has come into it. So there is that much of it left. So this high is 2182, 2182, and this high is 2072, 2082. Side 2072, 2082. Okay. And then the next one is this candle right here. That candle right there. If you go down, and that's a very big candle. So a 48 pip candle. Let's go down to the 15-minute. This one right there. Go down to the 5-minute. Yeah, it's this candle right here. Okay, that's the candle. Go down to the 1-minute. 1-minute, it's nothing, but it's clear on the 5-minute. Okay, that's the candle. So let's just mark that candle as well. 368, 103. 368, 103. Okay. So that zone is about again 26 pip zone. Okay. Now price has come into it. So that's the high 246, 2246, 22.56. Okay. So if price is to move down, if price is to collect liquidity, these are the areas that it can possibly come to. Here, if it needs more liquidity than up here, or even here. Now, if price decides to break all of these and move ahead, then that can happen too, okay? But if it does have to move down, it could grab liquidity from any one of these areas. Now, all these candles, these light red boxes or these pink boxes that I've drawn, are of liquidity candles, right, from these zones. Now, I've explained liquidity candles before. They are basically either an engulfing candle or a candle like this, right? The color of the candle doesn't matter. So this is also a liquidity candle. You can see the tail or the wick. It's a huge wick at the top, a lot of selling pressure. You know, that's what it means, a lot of selling pressure, right? Price opened here, tried to go up and close above, but there was a huge sell-off and price pushed down and closed back below here. That's what happened. That's how you understand the candle. Same thing happened here. Price opened here, tried to go up and close above here, but there was a huge selling pressure, right? Sometime during the while this candle was open, and price came back and closed down here with a huge selling pressure, right? The engulfing candle is different. Price opened up here, right? And then there was just a lot of selling volume and it closed down here. So it engulfed this entire previous candle, okay? So this opened here, I'm sorry, it didn't open here, it opened here, and then it tried to go up and close, but came down and closed here, okay? Because the open of a bearish candle is open here and closed down here, and a bullish candle is open down and close above, okay? So I'm looking for one of these candles or an engulfing candle. So all of these candles that I have marked, right, from these high liquidity zone are candles like that. I have gone down to the lower time frame, to the M5, sometimes even to the M1, to better manage the zone, so to make the zone a lot smaller. That's the reason I've gone down, okay? So now, okay, we've got about 2.5 minutes. So price is still pushing up. The zone is about 18 pips, 19. Yeah, 19, let's say. So, say 20. Okay. Okay. I don't like, I don't usually trade news, but I'm going to watch to see what price does. Okay. We have broken two highs here. Price has already broken two highs. So the next CPI candle can drop straight down, or price can break this high and go further up. If the next candle breaks the high, uh, I'm going to wait for the candle um, to see where it kind of pauses at, which line it pauses at before I look to take a trade. If price, the next candle just drops, then there's nothing I can do, because this is the area that I want to wait to take a trade, because I want to trade at the extremes. I define these areas as the extremes, right? So if I'm selling, I want to be selling from somewhere here. I don't want to be selling down here. I don't want to chase price. I don't chase price. Okay, I want to be selling up here. Okay, got auto trade on. 20 seconds more, 25 seconds more. Straight drop. So it did not come up there, price just, so that's kind of what I said. The next candle could either break the high, and we are breaking the high now. We are going further up. We did come here. We touched. So yeah, now it might just break all of that. It might just break and go through, because we've tapped the Asian low. That's what I was expecting to happen, right? Price did tap the Asian low. So I was anticipating a move down, but for price to pull up and then move down, but it just fell straight. It fell almost 100 pips, and now it's pushing up. So now I'm going to have to wait for the candle to close. I'm not going to do anything right now. So let's get rid of all of that, because price went through all of it. Okay. Select, sorry. Okay. So I was anticipating that price will come down, but pull back up into that area here, get entry and then come, but it didn't. It just fell. The next candle just opened. The 1 minute candle opened here and just dropped straight down 96, 97 pips, right? And now we've come to exactly where we said price would come. So it has come here, and now it's pushing all the way up. That's fine. That's expected, because that was the move. The move was to come to the Asian low, right? And that it did. So now we got to wait for the candle to close. Got to delete all of these and wait for the candle to close. So that's got to wait a good 13 minutes now, 13 minutes left for this candle to close, because we don't know where this candle is going to close. This candle may close up here, right? Might just continue up here, another 100 or 150 or 200 pips, or might come all the way up here. We don't know that. Or it might close down here, right? So you got to wait for this 15-minute candle to close before we do anything. It did come to this. It did come to this area. It did come to that area. Right here. It tapped here, but it broke it. Yeah, that would have been a nice pullback, but we are going higher. Yeah, we are going higher. So, okay, now we are coming up here. I believe price is coming to this weekly area, 2632. unless bearish candles start to close here on the 1 minute. Might just take a trade here. Might just take a trade here. Yeah, just might take a trade there because we are reacting to that area. So okay, partial positions closed there automatically. I'm gonna see if price comes back down here. It's 50, maybe 60 pips. Let's see. We are closing bearish here. 1 minute closed bearish. Stop loss is here above this, so okay. 25 pips. If we break this high, I'm gonna manage risk. This high is 4, 4. Yeah. If we do come up here, I'm going to close one of the positions. The only reason I took this trade is because price stopped at that light red area that I had marked. Right? That's the only reason. But it is coming up. Okay. Okay. It did close above. I closed the trade because I hate holding drawdown. We should continue higher. So the idea was for that light red area to work, price should have come down further. It didn't. We had a very small reaction, but we're closing above, and now we're going to continue higher. Okay. So let's get rid of all of this, all of that. I'm going to keep this until the candle closes above. Now it's coming back and closing. Wow, it's pushing down. It just took out the top and it came straight down. Interesting. 431. 471. We close back below that. But we have broken that zone, so price very likely should continue higher. It's very likely should continue higher. I was expecting price to, because this candle was holding, the zone was holding, price to push down here back to the this area right here, the Asian high. We may as well come there now. We might come there. Price might drop another 35 pips. Yeah, it's very possible. Price is closing back below this. I'm going to wait for the 5-minute candle to close before I look at this area again. This area is holding price for now, but I'm going to wait for the 5-minute, because the 5-minute candle closes back up here again, then we are going to push through. So I'm going to wait for another minute and a half for this candle to close. While I wait, I'm going to look at the next area where price can come to, and that is up here, right? That's the next zone that we have drawn right here. So this big candle here, this big candle here. So we go down to the H1, and maybe that candle, maybe look at it on the M30. Yeah, that candle right there. That candle right there. So that's a 100 pip candle. High 764676. 764676. Okay. Look at it on the 15-minute. It's not clear on the 15-minute. It's not really clear on the 5-minute either, but maybe this candle right here. This candle right here. Let's go back and see how this candle closed on the 5-minute. Okay, we did close bearish. We did close bearish. So, yeah, we did close bearish. It's too much of a zone. Yeah. Here. We did react to that area, close bearish. So, should come down. Should come down. High 462. 778. We are pushing. So that price, that area, the light area that I drew, is holding price. It's just, and it did come to that candle. So if you come here, I'm willing to take a trade here. I'm willing to take a trade here. 2030 close, 2034. Okay. Willing to take a trade right there. a minute and a half for this 15-minute candle to close. The next candle must respect this high for it to continue down. If it doesn't, if it comes deeper in, then I'm going to manage risk on this trade. Um, Two six two 471. Okay, that's my stop loss right there. Right there. It's about a little over 35 pips. I think we are pushing up. I think it seems like we're pushing up. This 15-minute candle is closing bullish there. Yeah, we are kind of, the next candle, 5-minute candle will break the high and go higher. That's what's going to happen. Yeah, the next one's going to break the high. This high is 189. This high 189. Yeah, it should break this high. Continue higher. $33.93. Yeah, we should break the high. We are going higher. I'm going to manage risk on this. Yeah. 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 We are breaking. We're going higher. Fine. Okay, so got a 0.79% loss. That's fine. That's manageable. We are breaking high. We are going high. Yeah, once this 5-minute candle closes, the next one should break. Should continue straight up. Okay. Back to what I was doing here. So this candle right here has liquidity in it. This candle right there, it's a 108 pip candle. Yeah, there we go. We broke the high. Let's get rid of all of that. The price is moving high. It's coming to this area right here. Okay. This candle. 514,866. 714. Okay, that's a big zone. This one right here, 5018. Yeah. So we're coming back to this supply right here. Okay, price is pushing up. The daily, we're coming to this weekly support, 2632. That's what's drawing price. Now, can it come further up here? Another 180 pips, very possible. We can come to daily supply right here. And daily supply is at 2642. Sorry, 2642. Right there. This area right here. Hmm. 's high is 4047. $36.74. $36.74. Hmm. 36.74. This is too low down. Yeah, that's about a 37 pip, 36 pip zone. If price gets here, so we are about 120 pips away. If price gets to 2636, then I'll look to possibly take a trade there, sell trade there. And stop loss about there, about 36 pips away. And in this zone right here, in this zone, it's a candle, 5 minute. Yeah, close 199, Open 197. Close 199. Open 197. Yeah. So if price comes there, that's a very big zone though. Close 4302. 43.2. Further up here, close 45.21. So these are minor supply zones inside. There's a drop. There's a rally, base in candles, 5 base in candles and a drop, then a drop and a base and a drop. And then this line here, 2641 or 2642 is this entire zone here, right? Because price dropped, failed to come back in and dropped. Okay. And this one here down here 263675 is also the same, or drop, base, drop. Price failed to come back in and dropped, right? Those are the areas that I kind of target. Those are the areas I pay close attention to. When you have a supply zone on the way down and price tries to come back in, but it fails and drops. So there's one here, and then there are 3 up here as well. Okay. So if I do take a trade here, stop loss will be there for that trade. If I do take a trade here, stop loss will be above this candle high here. Same goes for these trades also. So about 35 pips basically for of a stop loss. That would be the maximum stop loss, about 35, 36 pips. Okay. Now, yeah, that's the area that I'm anticipating price should come to. Once we close above, we should continue. We will do support resistance levels very soon, but I just want to kind of spend a little bit more time watching these areas. This high is possibly to be broken. Yeah, this high is going to be broken. So 200, 140 pips, 150 pips away. Okay, fine. Just keep these for now. Okay, I'm going to keep these Asian high, Asian low, London high, London low levels for now. And now just let's look at support resistance levels. Okay, where is price now and where is it trying to go to next? Yeah, perfect. Seven, eight. Once we close here in 40 seconds, we are coming back. We're coming up to this level right here. Yeah, perfect. Yeah, perfect. Coming here, and this open is 2.5. Low is 124. Right. So let's look at the 5-minute. What's happened? Okay. So 5-minute closed above. Tried to close back in. Couldn't. Just closed at support. Next one closed back above. Possibly coming to grab liquidity, go high. Where is it coming to grab liquidity from? Okay, where is it coming to possibly grab liquidity from? Maybe here. Sorry, let me get rid of that. Draw it properly. Possibly coming down here to grab liquidity. It's the 15-minute. Hmm. Six five. 6.5. Yeah, so we are grabbing liquidity to head higher. Let's look at that last zone that we drew. Yeah, perfect. Perfect touch. Right back to September 20th. If you go back even further, perfect touch. Okay, that is why it's so important to take your time in drawing them, because you want to get them right. You don't want to rush drawing support resistance levels. Okay, now price grab liquidity. We're heading up. We should come and take out this high here. Okay, yeah, we should come and take out that high there. Um, I would have liked to see price come down here. Then if it did come here, I may have taken a touch trade with a stop loss below that current candle that pushed up to take a trade right up there. That would have been a good trade, almost a 100 pip trade from there, but it didn't come down. Okay, and that's fine. There's a lot of volume, buying volume, so it doesn't need to come down to these levels anymore because there is a lot of volume already. Hmm. Yeah, we are pushing up. Took out that high. We are going up. Hmm. It's a shame. That was a good. It's a good trade to take. Once he broke this low to take, it's a good trade to go up. Um, that's okay. I'm not fully convinced about this level. Not entirely convinced about it. Twenty 16. 889. Yeah, that makes more sense. Yeah, this makes more sense. Open to 323. This high 2431. Yeah, yeah, that makes more sense. Hmm. Yeah, we touched it. We pushed up. We're trying to close back below. We broke on the high here. So price should push up. It's closed above. 50 minutes is closed above. This candle has broken the high. Probably coming back for more liquidity to continue higher, right? Back to 2632. If I do see a liquidity grab here, I might take a trade to go up. If I do see a liquidity grab on the smaller time frame, on the lower time frames, just because there's a lot of buying volume right now. There's a lot of buying pressure. If you come, um, hopefully I've drawn the zones correctly. I've drawn the support resistance levels correctly. That's the key, to draw them correctly here. So I'm hoping that I've drawn them correctly, that we Maybe come down to grab liquidity and then push up. Open 3150. 30, 50, 3250. Yeah, that's fine. Yeah, that's good. 70. Yeah. And then further down. So that's resistance. We've got these levels. We've got three levels. We've got one above, one right in the middle, and one here. So if price closes back above this, we're coming to this. Okay. So I want to see if price pulls back for liquidity and rejects this area. I want to see if I can get a trade coming all the way up here. That's the idea. Trading from these support resistance levels. Now this H4 supply zone has broken, so I can delete it for now. I can delete it, but I just want to leave it until price fully closes above, like a high time frame candle closes above. Next, below, in terms of its support resistance levels below, 2615, 2615. 2616, 2615, 2616. Okay, that's another level right there. Okay, that's another level right there. So 2 minutes more for this 15-minute candle close. We are closing back below. We are closing back inside. Price is closing back inside. Came back to retest here. Stop loss 13 pips. I want to see if I can take a trade here with a stop loss below here. And this low is 715. 75. It's 46 pips. I'm going to take a trade there. Stop loss here for this trade price to come back up here. If it comes further down, I'll take another order somewhere here. Close 862. Okay, so 45,862. So the stop loss is under this 1715, and I'm anticipating price to come up here and then here, right? 90. That's the plan. So 15-minute candle is about to close. Okay, so 15-minute candle closed on this low to break. Yeah, okay. Let's see if we push up now. If price is to move up, the 5-minute has to reject. This is the 1-minute. The 5-minute has to reject this area to push price back up here. All right, that's the idea. Come to support, reject this, and push up because we've closed above. So that's the idea. But I'm not willing to hold this trade obviously below this point. I will going to close the trade if we get below here. This entry was a little too high. Maybe I should have waited here, but the idea is for price to push up there. 15-minute, this one broke, this one broke, this broke this broke this. Doesn't seem like it. Like seems like it's coming down. Yeah, gonna have to close this trade right there. If the 5-minute candle doesn't close above this support, then it's very likely that price is coming straight down. Because this 5-minute candle needs to close back above this support for price to go up. If it closes at this support like this or below, then we're coming further down. It's ranging. It's ranging for the NYSE Open now. NYSE Open is in about a little over 5 minutes, maybe 10 minutes. Yeah, we are coming down. The 5 minute is closing below this support. Five, yeah. Yeah, we closed at support. We should be coming down. One five 05958575 75. Unless a 5 minute candle closes above here, price is not coming back up. 5 minute candle has to close above this support here. Has to. Must close for price to come back up here. That's the idea. 90 pips with a 18 pip stop loss, 18, 19 pip stop loss to come back up here. And then go further up there. but it doesn't seem like it's gonna close. It's gotta, yeah, we're closing down again, closing below. It is strong 5-minute bullish close here, above here. Closed back in, so inside support, not outs, not above it, not above it. Should have closed. High 1761. This high 1755. 1761. 61. Yeah, closed inside support, did not close above it. A 5-minute candle has to close above it to continue. It's still coming down. Yeah, we're coming down. We're rejecting this resistance area now and coming down. But 5 minutes more, 4 minutes more for NYSE open. So price pushed up NY session, kind of range in or pull back in after the NY open. Is NYSE going to continue higher, or is it going to continue? Is it going to reverse and continue down? That's the question. Because we've closed above this supply demand, this is supply level, and closed back inside. So price could push down. That's possible. Could push down. That is possible. 776973. Either way, it has to come to this 262350. Price needs to come to 263. So even if it's trying to go down, or if it is trying to come up, it has to come to 2623 but it might break the low and then come up. 2 minutes more for this 5-minute candle to close. Let's see where it closes. It needs to close above to come up here. So 5-minute closed above, closed back below. 15-minute closed above, closed back below. 30-minute closed above, trying to close back below. Trying to close back below. This might be the reversal, the NYSE reversal to go down. It's very possible that we pull up here and then just continue down. We're going to wait and see. If you break the high, then we're going up here. We're going up at least another 50, 60 pips, even 90 pips. Closing back below support. Closing back below. 5 minute is closing back below. The next one should continue down. I am going to close this trade here. This price breaks this low. This low 41. Yeah. Yeah. We are pushing down. Close back below, we are pushing down. Price is closing back below these levels. So we are coming down. It's too much of a... I want to see price come back here to take a sell trade. That'll be the last try I'm going to give my trade, the last opportunity, the last try. We close back above, close back below. This is a strong bearish candle moving down. We closed below these resistance levels, close below this, close below this. Price should come down, come all the way down here to fill this wick. But I can't chase price. I want price to come back up. Let's see what the 4-hour candle. The 4-hour candle is closing a doji. Yeah. Price needs to come here. Open 361. Okay. So we closed. We're closing below. We closed right at the London high again. Once a 5-minute candle closes below this line, the London low, then we're continuing down. We're coming all the way down again. We're coming here. Yeah, it's pushing down. It's just yeah, the one eye is pushing down. 30-minute strong close below, going down. No pullback to get in, unfortunate. Just no pullback to get in. Possibly have to wait. Unfortunate. This candle right here. This high 618 292 618 292. Yeah, that candle right there and that candle right there. Yeah, so the NYSE seems to be reversing. This is the push up and we are reversing. What were the numbers, by the way? They were good numbers to push price down. It's possibly a liquidity grab to just continue down. Okay, that's one position I'm going to take to go down. Price should come to let's make that 35. Yeah, 35. And then the next one, two 606. Six. Yeah, so 135. Take a trade here, another one here, coming down to this. Yeah, 2616. 2616. 2612. No top wick, no top wick, no top wick. So the next one can come up, or this can candle. The next candle can come up to break this high. Go in deeper. Hmm. We are pushing up. We are pushing up. We are pushing up. Price is pushing up. Yeah, it came here to grab liquidity. Yeah, came here to this support, not this one. It is pushing up. It's not coming down. It is pushing up. I am gonna close this trade. Yeah. Yeah, I'm gonna close this trade. So that's a 2.2% loss today. That's a little more than I had anticipated to take. Um, yeah, it did come to this support level to push up. The 15-minute candle closes like this. We are going up. That was the pullback. Yeah, that was the NYS. That was the pullback before NYSE to continue higher. It's pullback to continue higher. Yeah. Because close we didn't close below this London high. Price just sat right there on the 5-minute and pushed back up to come to retest this high here, creating support to retest the high. Made a new high in NY session. Okay, pulled back, creating support to come back, retest the high, and then we're coming further up. Now, I'm going to wait for the 4-hour candle to close. I'm not going to do anything right now. I'm just going to wait for the 4-hour candle to close. And maybe that's it. I'm not going to try to take any more trades. That's, yeah, 2% losses. I don't want to lose any more than 2%, 2.2%. That's it. Yeah, so that's going to be the end of the stream as well. I'm going to be here maybe for the 4-hour candle to close. I'm not going to be taking any more trades. That's it. Yeah, that's it. I'm going to see how this plays out. We did come back up here. Yeah. Oh, we touched this candle. Oh man, touch this candle. Okay, that's it. I'm not going to be taking any more trades. That's going to be the end of the stream. I'm not going to try to take any more trades. 2.2% is a is more than what I plan to lose today. 1 to 2% is okay, but a little over 2% is borderline. That's it. I'm not going to. I don't want to lose any more than that. But it did come and touch that red area beautifully and dropped 60 pips. It's just ranging right here. It's no clear direction. Okay, that's it. I'll be back here tomorrow. Tomorrow is PPI. We'll be here to do the same analysis, and then look for an opportunity. All right, see you guys tomorrow.